Hi guys, this is Hector. Today is Tuesday, 15th of May 2007, and following once again the American dollar against the Canadian dollar for possible short entry. I'm liking this setup very much. Apparently it seems like we may be resuming the downtrend that we've seen throughout the last 2 months on the Canadian dollar. We had some retracement, some nice retracement, perhaps a healthy retracement on the 4 hours chart, but seems like now the 30 and hourly moving averages are beginning to curl down. Alright, seems like that was just a retracement, not a trend change altogether. That's why it's so important to be conservative and to not simply reverse your positions as you see the first indications of a trend reversal, because it might be just one pullback. All right. Anyway, I'm following in this case the 30 minutes chart. Okay, it's showing a nice downtrend, okay, throughout the last 3 days. This is today's price action, this is yesterday's price action, and this is the day before. All right, you can see that we're very clearly that we are making higher highs, right, and higher lows. All right. It's clear indication of a downtrend, but anyway, I just need my moving averages as usual to indicate me the actual market sentiment. All of them pointing in the same direction, all of them parallel to each other. The 30 and the 50 already parallel, the 100 catching up. Price had a new swing down, a period of consolidation, catching up with my what I call the dynamic area of resistance. As you all see, as you all know if you've been following my videos or my trading course in my website for a while, area of dynamic resistance. Price catches up with the moving averages, or rather the moving averages catch up with the price and push muscle the price down to into a new swing. All right, swing down, swing up, swing down, consolidation, and all the swing down. Okay, very typical formation. So what's next? Well, next is once again to wait for price to reach the area, to let the MAs, the moving averages, catch up with price. I'm liking this level, the 110.50. It was the range bottom. Okay, also round number, psychological support and resistance, as I always say in my website. So basically I'm hoping for this swing down to conclude, bounce off this level, back up to this area 110.50. It's by the way, it's the 61 Fibonacci level, but right there I've measured this already. A number of elements working in our favor: the moving averages, the round number, the previous swing low, 61 Fibonacci, etc., etc. It's a nice confluence of resistance elements working in my favor. I'm hoping for price to retrace right there, up there. I will zoom into the shorter time frame in search for a move down. However, today at in about 1 hour and a half, we have the CPI number coming out. Later on, we have the Empire State news announcements. Also, we have the tick data shortly after. We have a number of fundamental announcements being released today that might very much affect the outcome of this setup. As usual, as you know, I don't trade the news. I let them. I have a blockout period. All right. I don't track any position prior to the news or immediately after. Okay, I let the news get out of the way. I let the dust settle, and once the technical analysis factors become the main force driving the market, okay, meaning levels of support and resistance, that's where I begin to search again for an entry. All right, I don't like to trade the spikes, news delivered spikes. I don't like to trade on emotion. That's why I let I keep myself out of the market when the news are about to come out, okay, are due to be released. Anyway, I'm going to pause the video now. We'll keep on updating if anything happens, okay. Either we get a retracement down here and a bounce off that area triggering my signal. If we break above there, this setup will be invalid, it will be discarded. If the news spike price up and down and mess up the chart, well, that's another no-go. Alright guys, see you soon. Hi guys, well, quick update with London session. It's barely 2 hours to the closing time, 3 hours actually to the closing time, and well, as it seems, I didn't get the retrace. I was looking into, okay, if you remember, I was looking for a retrace up to the dynamic area of resistance with the previous swing low. There was the 61 Fibonacci around there as well, and the round number 1 time 50. Instead of that, we fell about 12 pips shy. The retracement didn't quite get all the way up there. It bounced off the 38 Fibonacci and shot down, okay, for about 45 pips, something like that. Quite a shame. It was a nice setup, okay. It just I wanted to the retracement to go all the way to the strongest area of resistance, and the dynamic area of resistance, the area I like to sell from, all right, in downtrends. That didn't happen. The retracement fell shy about 12 pips, like I say, and shot down from there. So no trade. I didn't take any this entry, okay. I didn't trade the trend line break with the have a look. Let's have a look at the shorter time frame, okay. That's the trend line break I'm talking about. This trend line break, okay. I didn't trade it because my plan was to wait for a retracement up here, so I haven't profited from that move. Well guys, sometimes you get them, sometimes you don't. You elaborate your trade plan. My trade plan was to look for a short entry up there. Didn't go all the way up there, so the most important thing of all is to stick to your trade plan. If it didn't pan out as expected, there is no trade to be taken, at least as far as I am concerned. Alright guys, see you later on. Bye bye.